is going on? All right, let's try this again. I don't know why it keeps having issues today. Sorry about the technical difficulties. It's kind of the way it is. Streaming always has some type of issues. Can I use a bit rate? Recommend that you use. All right, can you let me know in the chat if everything looks okay? Says everything should be good. Much better? Okay. I think because I had 4K settings on, I was using ultra low latency. I think I could have just changed that. I didn't even really have to turn the whole stream off. I don't know. Right? I'm not really a tech savvy guy. More of a trader than anything. But yeah, so let's just double check. So how do the letters look? Right, like this daily order block label. How does the breaker label look like? If you could let me know, Fritz. Appreciate you hopping back on, by the way. Visible and doesn't lag. Okay. Yo, what's up, Tony? Appreciate you hopping back on, bro. Having a little bit more technical issues than normal, but you know, I guess that's kind of just the way it is, right? I'll try to figure it out later. Maybe one of you guys can help me later when I adjust the settings and see if I turn it to low latency. See if I can't get the 4K. How clear is it? Would you say that it's like really clear? Because I can't really tell. I just see what's on my end. It looks clear to me on my end, but I wish there was a way for me to. Wait, is there? It's still a little blurry. I could see it looks a little bit blurry. Some of the letters look blurry a little bit. It's still good quality though. Still good quality. Looks like normal. Okay. And normal is good enough, right? I definitely want to do what I can to get you guys the best quality because I have everything that's necessary. I need to figure out all the technicals, right? Like the settings and all that, like what works with YouTube, because YouTube is complicated. Like they accept certain things, they don't accept other things. In terms of settings, I don't know why it's such a problem, but yeah, kind of just is what it is. But yeah, so I guess we'll get right into it. So we have PPI. Okay, for those that don't know what PPI is, stuff that has to do with labor, change in price, finished goods. So yeah, PPI is pretty volatile. It has to do with the job market, right? And if the job market's doing well, or if it's doing bad, that has a pretty heavy impact, and they use it as a reason to be extremely volatile. So we have news at 5:30, and then we have an orange folder later on, right? So when we have news early and then something later on, many times we have to be prepared for things being manipulated, right? Like the early stages of things will end up being the fake move, right? And then we can potentially just see it hold up until this moment in here. Doesn't always happen. It happens more often than it doesn't. But yeah. Give me 1 second. is everything tripping out? Everything's tripping out today. It's so weird. Whatever. But yeah, so of course, the first thing we think about is Power 3. Okay, so if we think Power 3 and we look at the news schedule, okay, we have basically no news on Friday, no news on Thursday because it's a bank holiday. So day before, day of, day after a holiday. So the ending of the week is going to be low probability, just automatically, right? For it's a possible weekly Power 3 got me confused. What about the weekly Power 3 got you confused, brother? Also, no news Monday. Yeah, what about the weekly Power 3 has you confused? It just means that we may have like kind of like a slower end of the week. It's the end of the month also. So you got to remember, we're probably going to cap the monthly range. So if it was accelerating in one direction, it's probably going to try to come back into the range, just like how Friday does in the weekly range. Except this is just for a larger view. So yeah, when we get to the chart, we'll make more sense of everything. But we could just see that the landscape risk-wise is going to be a lot more high risk, so we got to be cautious. Doesn't mean you're fearful. Doesn't mean you can't take a trade. Doesn't mean, it's not something you can find something in. It just, most likely going to require more experience, more understanding to be able to confidently find something. You may find something, right? You can go in there and make the candles do whatever you want it to do, right? Whatever you think, you'll be able to manifest in the chart. Whether it results in a positive or negative thing, obviously, is subjective, but it's definitely going to be a more heavy risk day or heavy risk week. It's the end of the month. We have a holiday, so you just got to keep that in mind. We're in November, December, January are some of the worst trading months. Again, is that a statement telling you that you can't find something? No, you can find something every day. In my private group, we're pointing things out every single day. Literally, there's something to trade every day. Does that mean I'm engaging them? No. Does that mean that every opportunity we spot is high probability? No. But when it is high probability, we're able to go in there and find stuff. Even in low probability conditions, we're able to go in there and find stuff. As you guys have seen this whole entire year, we just drop our risk and accept the fact that if we do lose, it was in a low probability scenario anyway, and we have to just accept it or just don't take a trade in those conditions. But that's something totally up to you guys, right? That's one of those personal decisions you guys are going to have to make. Okay. But yeah, so Monday and Tuesday, we're going to see what happens. Wednesday, we'll keep an eye on things. There's a lot of tentative news, so those news events may not even come out. And if the red folder tentative news events don't come out, we basically have 5:30 that has the news, and we'll have to obviously anticipate potential consolidation. It may be stuck. When we get to the chart, we'll also kind of see where we're at in terms of premium and discount and where equilibrium's at as well. Okay. So yeah, that's kind of the landscape. And we got, so this week is literally the last week of the month. So it's gonna cap the month. So expect that things are gonna slow down, just like on Fridays. When it's a fast-paced week, and we're looking at Power 3, the week ends or gets capped once Thursday or Friday hits a higher time frame PD array or takes a higher time frame liquidity pool, right? And then once that happens, it comes back into the range. Well, same thing for the monthly range. Same thing for the quarterly range, for quarterly Power 3. Same thing for the yearly Power 3. We're inside the yearly Power 3 right now on the last 2 months of the year that's been rapidly running to the buy side, like on a tear, non-stop bullish, right? So it's reasonable for them to do a pretty heavy correction if we see that. It looks like it may have started, and when we get to the chart, we'll talk more about that, okay? But hopefully that makes sense. Let's get ready to dive in. But yeah, so first and foremost, obviously, as always, right, we start with the bonds and yields. We're going to start with the yields today. Go to the monthly chart. I don't think much has changed since the last time we spoke. Kind of just been in a range-bound environment. Yeah. It's just been kind of sideways, gravitating lower a little bit in the 5 and 10 year, but we're definitely holding up within this monthly equilibrium that we talked about. Okay, so it's definitely reached up, and it's taken out the previous month's high, and then now it's came off of that a little bit. This looks like a retracement. So we have a change in state here. Drop down below this, drop down below this up candle too, and we closed below it a little bit with one candle, but we've definitely dug into a discount relative to this low extreme to the high extreme. So if it does start rapidly repricing higher, and we start to get up above these levels that I've been mentioning for pretty much the last couple weeks, getting above this weekly fair value gap, staying above that, breaking this high, getting above this monthly inversion fair value gap, or monthly reclaim fair value gap, and then just displacing. That's numerous PD arrays being violated. So why force sells, right? Like why would you force sells even if this was the NASDAQ and you see this happening? Why would you force sells until something confirms? What confirms? If price was to leave this, displace below these gaps down here, and then use it as an inversion, right? And then maybe continue to see changes in state of delivery going to the downside, order blocks being respected to the downside. But if that again doesn't happen, we have a weekly bullish order block that we've been watching, and we got up above these levels. So for now, we're kind of sideways also, and it's the end of the month. So we'd have to have a limited perspective and, not really try to push too aggressively for things. And we'd have to wait, right, in this instance. Okay? But I wouldn't really be too surprised if it holds this and goes higher. If we break up above this, again, we have trendline liquidity up here. The yields dictate or influence heavily what the DXY is going to be doing. So, when the bonds and yields are sideways, when they're indecisive, when you're in a month like November and December or January, with these correlations, not really trending, you can end up having a pretty tough environment to trade in. Something you can also look at, we have this low to the high extreme, like I just mentioned. We're at the equilibrium point. So we're also, with all those things I've just mentioned, we're also at a higher time frame equilibrium. You guys that have been here for a while know, when I've talked about equilibrium, when we're stuck there on the higher time frame, that presents us with harder to trade, high resistance environments. All right. Change this real quick. So when we're in a higher resistance, lower probability environment, given these different factors, you got to lower your risk. And when we're sideways, right, if candles are just overlapping like this, or, like say we bounce back and forth, and we have multiple daily, weekly, monthly candles just, back and forth, like up candles, then a down candle, up candle, down candle, just going sideways. That's a very easy visual way to identify low probability conditions, because that drags down to the lower time frame, okay? And you don't really, you don't want to push too hard on that, because those are the times, if you look back on your trades that you've taken losses on, or conditions that just were, not probable. You see that's when you took your losses, was when things like that, when characteristics like that were present. Stuck at equilibrium, overlapping candles on the higher time frame, next to a holiday, close to NFP or any of the red folder news events that we talk about, like CPI, NFP, FOMC, rate announcements, so on and so forth. Those are a lot of times when this type of condition happens, right? And then, of course, the added element, time of the year, because seasonality is important. Different portions of the year have different seasonal tendencies. So, when you're in a time of the year like November or January or the summer months, a lot of times you'll see these low probability conditions take place, and it goes in and out, right? It doesn't last forever. Sometimes it'll last for like a week and then it opens up again, even during those times. But it's just something to be aware of, because you got to have situational awareness, just like a soldier in battle, right? You could tell when the battlefield's calm and it's an okay time to move, maybe press a little harder. But you can also tell when bombs are blowing up around you, you know, and you don't want to get your head blown off, especially as a new soldier, right? So hopefully that stuff makes sense. Again, we have these levels in here to watch. If it breaks down below these levels, I'll target this low, monthly low. Because we're at equilibrium, it's kind of a 50-50 shot. If we stay above this and displace and get above this high, that'll set the stage for us to then try to study how it's going to use this in here, right? Break that down into quadrants as well, and then kind of study how it's going to react to them, right? And then once it gets above that, our target and interest ends up really ramping up to try to target the buy side. But again, for this market, we're in a mode of I need more information. We do have, you know, scenarios to paint for either side depending on what happens. For now, we're inverting these PD arrays in here, and we didn't respect this order block, so that's definitely telling us something, okay? And we're just going to have to continue to watch and see what this is going to do. But I'd like to see this hold and then try to push this higher and respect these levels, because if not, we're going to go lower. But because we're at equilibrium, just to reiterate, we have a situation where we got to wait for more information, okay? So that's my thoughts about this. Different levels I'm identifying, paying attention to. Got a monthly wick here too. Monthly wick down here as well. So that is this right here. Monthly wick. Monthly wick. So it's respected this wick and it's respected this wick. And on the on the weekly chart, we see that we're inverting these levels. So you take that information and then you just keep moving lower. Right, and as long as those higher time frame levels stick, we'll be able to continue to trust that it's, you know, going to go in one direction or the other. In this case, go to the buy side. All right. Let me know if you guys can hear the music. If it's too loud, just let me know, and I can turn it down. It seems a little loud in my headphones, but doesn't seem too loud on the dashboard. So yeah, if you guys could let me know, that'd be great. What's up, Chawezi? Haven't seen you in a while, bro. It's good to see you. And again, if you guys get value from the content, if you've enjoyed seeing us call the market for now almost 12 straight months, accurately, week to week, month to month, and then of course, day to day for those of you that are in my private group, definitely do me a favor and like the video. Subscribe to the channel if you're new. There's a lot to learn here. We do this every week, and I mean, it's just unrivaled, and we prove it every week. So if you guys could do that for me, that'd be much appreciated, so I could reach more people just like you, and we can help as many traders as possible. Can a smart money reversal for a market maker model turn when in internal range liquidity? Appreciate the subscription, by the way. I'm not sure why the little thingy didn't pop up. It's kind of strange. But yeah, thank you, Chanel. I'm assuming. Market maker turn when internal range liquidity has been reached or taken. I mean, it kind of just depends. That's a good question. Can a smart money reversal for a market maker model turn when internal range liquidity has been reached or taken? Let me think of a good way to answer that. Can a smart money reversal for a market maker model turn when internal range liquidity has been reached? So I'm assuming you're talking about a scenario like this. And this is like a market maker sell model here. This is internal range liquidity. So I would say absolutely. It just depends. How is that taken? How is that high taken? Right? If it's completely smashed through it and the higher time frame candles are closing above that specific level, you got to kind of stay within the narrative, right? Because this could easily just be a retracement. This could be the daily chart, but this could literally just be 2 weekly candles, right? This could be the daily retracement within one weekly candle like this. right? It could very easily be something like this, and then this is what the daily delivery looks like. So I mean, I guess an answer to your question is yeah, of course, depending on the circumstances, right? It depends on kind of what's available, but it can absolutely be a thing that happens. Smart money reversal in a market maker model can turn when internal range liquidity has been taken, because this would be basically a scenario depicting that type of scenario, right? Or an answer to that question, basically. Does that make sense, Fritz? Yeah, I'm assuming that that is specifically what you were asking, but hopefully that answers your question. Okay, good. But yeah, so that's pretty much my opinion for this asset. So let's continue to move along. So let me make sure I didn't miss anything. Yeah, it's definitely been a busy couple of weeks. That's for sure. That's for sure. Getting ready for the holidays. Hopefully you guys are having a good walk up to the holidays if you guys celebrate Thanksgiving and Christmas, for those of you that do. But yeah, so yeah, the yields indicate or have an impact on what the DXY is going to do. The bonds have a pretty heavy impact and generally dictate where the indices and the foreign currencies are going to go. But we could see that there's a pretty solid crack and correlation, at least going on for the moment, between the indices and the bonds. Okay. The bonds and the yields are kind of having an issue right now for whatever reason. They've kind of just been held, right? They're kind of stuck in consolidation. There's been a lot of announcements, and it's been pretty rapid since July to the buy side for the bonds. But that's because it was announcement after announcement, rate cut after rate cut. So it's kind of instigated pretty solid volatility. But I guess you can kind of say, you could say that the indices have had a lagged response to the decline that did happen. So it did have a lagged reaction. We are above this fair value gap here that we've been watching. So if it stays above that, right, we got really, really obvious equal highs up here. But again, if this happens, right, if this does end up running to the buy side, which we don't see any SMT either. So we have a lot of buy side liquidity that's readily available to get swept out. So I really wouldn't put it past them if they continue to hold this, because structurally everything's held the integrity of buy side. Right? If you're looking at this time frame, we got a monthly bullish order block here too. So if we can get up above some of these other levels, if we also move up a little bit on the weekly charts, we could see a 2-week order block. So down close candle, held up. Down close candle seems to be holding up. So, but if it was to break through that and close below the 50%, which it has not done, if it does that, then we would be able to reach for lower targets. If that doesn't happen, I mean, we have this order block here. If this order block is left and then violated, that'll be a second change in state. And then also the order block here will be violated. So we'd have a pretty solid confirmation that price is going to turn around. Probably look to seek a little bit deeper price action down here. Maybe come back a little deeper into the range, from this low to that high, which is basically the monthly range from fractal low, most recent fractal low that was energetic, to fractal high. We could see that we're also inside this monthly wick. And then we have this monthly order block here that I just mentioned. So we're definitely going to have to sit and watch what that's going to do. For now, though, structurally, unless this low is violated on this weekly candle, we're still valid to continue to keep going higher, right? But again, if this breaks, that'll be one change in state of delivery, right? One up candle taken out, and then a second one taken out, and then the weekly bullish order block 50% that should have held price would now be failing. So why would we force buys, right? And that may have a further negative impact on the, or downside impact on the indices. Okay, so that's going to be what I'm going to be watching here. We do got relative equal lows down here, so that's definitely something to concern yourself with. We'll see if they want to tap it. It seems like all the bonds have held those levels, so it's kind of interesting. It just shows that the higher time frame levels that we're trading off of, like the monthly bullish order block, which is on the 5 minute or the 5 year T note or T bond, and the 30 year. So between the 30 year and the 5 year, maybe, is it on the 10 year too? Yeah, the 10 year has an order block here too. So all three of them are reacting off of a bullish monthly order block. So again, we have to break down below this low to be able to be confident, because then we can verify that there's been basically a double change in state of delivery, right? One down candle or one up candle here taken, and then this one too. If that gets taken, that's generally not something you want to see if it's going to keep going higher, right? And then of course we have these other PD arrays here, like the low, the fair value gap. So we don't really want to see that get taken if we're going to keep going to the buy side. But for now, right, it seems that it's still holding strong within that narrative to keep getting up potentially to these highs up here. The 5 year and 10 year have a very clear equal high. Because it took this high out, it may have a kind of a hard time getting up there. It may still get up there, but because it purged that, it may not really get up there super quick. But we do have this up here. It's a larger pool of liquidity, right? It's like a larger context. But even still with that, we would have much rather preferred it to leave that, give us a failure swing, build up liquidity, because they've already purged liquidity up here. Because that purge of liquidity is present, that makes this even more important when it violates the order block for a double change in state of delivery, seeking the sell side because of the stop run, right? But because we left this available up here, there's still a chance for it to want to go up there, right? And structural integrity wise, in terms of PD arrays holding, we haven't really had market structure change overall. There hasn't really been a significant change. So because of that, because of our 3 PDA validation rule, just because of the just overall market structure, the way it looks, and the order blocks that have been respected, right? Going to the 2-week chart, you can still see down close, held, held. All of them are holding, so there's really nothing convincing that we're going to turn away from this run higher. But we'll see, right? We'll see what happens. Again, it's the end of the month, so it may just be stuck for the rest of the month, right? It'd be the same analysis I would do if we were on the NASDAQ. It'd be the same stuff. If the NASDAQ looked like this, it'd be the same stuff, right? But yeah, so that's, I guess, my opinion on the bonds and yields. Hopefully that makes sense. Let me check the chat. And again, just a reminder, don't forget to like the video. It's free if you guys like what I do, because honestly, I could just be with my private group, right? Which I was for a long time. But if you enjoy this content, definitely show me that you like it and support the channel by liking the video. Subscribe to the channel if you haven't already. We've done a lot this year, proven a tremendous amount of consistency, pumped out a tremendous amount of funded traders. So, we got something special here, and the students that have been paying attention closely, like Tony in the chat, Chawezi in the chat, Fritz in the chat, you guys are going to be something special because of the things that you've been learning. Because, you spend a little bit of time here, you see that, not many people do what we do. I'll never, by any means, say that I'm the best trader, but I definitely know what the hell I'm talking about, right? And I prove it. So yeah, if you guys could do that for me, I would really appreciate it. Let me see. Big ship taking long. Yes, exactly. Good point, Fritz. We've talked about that before. When narratives change, right? When things are going to change direction in terms of higher time frame narrative, it's like turning a big ship, right? It takes a while to be able to do so. It doesn't just go overnight, because there's a sharp decline that happens on the 15-minute. The whole narrative is going to change. Like that's just not how it is. It takes a lot, because the heavy inflows in the market, big players, right? They're going off of the higher time frame. So that's generally where the real story's at. All the lower time frames are subservient, showing you details that are creating that higher time frame delivery. Okay. Let me see. That little statement has helped. Oh, that's good to hear, Fritz. That's good to hear. But was it you too that said that you had an affinity for me basically saying that, or kind of relaying the message like, okay, we're looking at the daily chart, but imagine this was the 5-minute chart, right? Were you the one that told me that that perspective helped you? I can't remember who told me that. I know someone mentioned it this year. But I mean, that's one of those little quirky things that help me understand the fractal nature of price. And so when I went to the lower time frame, thinking I would be thinking of the higher time frame context, but I'd be thinking of, okay, well, what if this was the 5-minute chart? Would it be the same? And then I would go to the 5-minute chart and see it's exactly the same. It's just working within that larger perspective. You know, so oh yeah, for sure. I kind of thought it was you. Sorry, my dog just scared me right now. Just snuck in. But yeah. Presh said your analysis is top notch. I appreciate you saying that, brother. Appreciate you saying that. Welcome back, by the way. First, especially because my model focus is on 1 hour as my higher time frame. Oh, nice. Yeah, if you use the 1 hour, 15-minute down to the seconds chart, ICT has said that that opens up a whole new world for you. So, I mean, he's absolutely true with that. Even though the 1 hour chart is being used, Fritz, as your higher time frame, I definitely do want you to always pay attention to at least, at a minimum, the daily chart, right? You want to at least have that context behind you. That goes for all of you, whether you're a scalper or a short-term trader or any other kind of trader. You're always going to want to still keep that higher time frame in mind, okay? Because that's where big money's playing, right? We want to play in their playground. We're kind of always in their playground by engaging in the markets, but you know, we want to be able to know what they're looking at, like what is important to them, so then we can try to understand why it's important, and then it becomes important to us, you know, so we can ride their coattails. All right, so yeah, does everything make sense so far as the bonds and yields? Just give me a 1 in the chat, and then we can move on. We'll move on to some other stuff like the currencies and the indices. Just give me a 1 in the chat if everything makes sense so far. It's a lot of the same stuff that we do every week, right? I appreciate you, Fritz. For sure, I agree. And that is why the Sunday calls have helped me so much. It sets my eye on PD arrays that I look on. Yeah, exactly. That statement right there, that's why I do these Sunday calls. Is to prepare you guys for battle. Show you what I see, what the battlefield looks like, and you can kind of know, because it's not going to change overnight, right? The higher time frame doesn't change overnight. So it gives you like a week to week analysis that's not going to dramatically change unless something big happens. So if you can solidify the higher time frame, especially the weekly and monthly chart, like where that's headed, or even the quarterly chart like we talk about every quarter, which is going to come up soon in like 20 days, something like that. Yeah, about 20 days, I think, something like that. But it just sets you up long term, so then you don't have to be flip-flopping on the second chart with your narrative and, you know, your bias, right? Just flip-flopping everywhere, not being able to trust anything. You know, not understanding the higher time frame also takes away your ability to face down times when price goes against your bullish narrative. Say it has like 2 or 3 days that aggressively reprice lower, but you've been bullish on the higher time frame. If you don't know that you've been bullish on the higher time frame, or don't at least understand that and haven't like solidified that, this decline will probably make you think that you're going to go short. You know, if you don't have a process to validate and invalidate what the narrative is, like what changes things versus what's normal, it could be just a retracement to go and continue. If you don't have that skill set, which is something I try to give to you guys every Sunday, it's hard to stick to a narrative, and that's why people flip-flop. That's why ICT has said the one area he spent the most time on and still spends the most time on in terms of time frame is the higher time frame, the monthly, weekly, daily. He uses the quarterly chart too, right? So, he has a well-rounded analysis process, and success leaves clues. So why would we not copy that? You know what I mean? Why would we not try to emulate that? So I chose to do that. Some of you guys are choosing to do that. Emulate what's been successful, what you've seen proven to you. And, the fruits of that are pretty sweet, if you ask me. So assuming that everybody understands what we've talked about so far with the bonds and yields, we will be moving over here to the DXY. I'm actually going to break this down a little bit. What does this do? The journal will sync in the layout. Will sync globally. What the hell does that mean? I have no idea what that means. I've never seen the arrow there. But yeah, anyway. So yeah, if we see that the yields are going to continue to reprice, I mean, you see the relationship with the DXY and the yields. Look how closely that looks. Like closely similar that looks. Right? Just overall. Right? It's not going to be lockstep. It's not like Euro and the DXY. But I mean, you could see the correlation there. Right? The yields went higher. That instigated a run higher here too. Right? If we go to the daily chart. Yeah, we walked this entire run higher. Right? I called this inversion fair value gap. Right? We watched that. I know I did notice that ICT also mentioned it. I saw him do it a little bit late. But even he mentioned this inversion fair value gap, and if it holds, it'll rally. Those of you in my private group, you guys see the Razor model, our flagship model for the private apprenticeship group, model that I teach you guys. You could see that fitting in here, right? All the different components like we talked about. And then, of course, we've been talking about market maker buy models all the way up to where we're at here. We called this high well before it even got 50% close to it. We've had our attention there. And yeah, we had these equal highs up here, trend line liquidity, fair value gap. I mean, we've narrated, if you go back to these times and look at the Sunday calls that I've done from these times, you see that we narrated and have basically walked this like a dog all the way up to this quarterly high up here. Quarterly high meaning the 3-month high, all right? Because each quarter there's 3 months and there's 4 quarters in a year. So 3, 6, 9, 12, right? Kind of blanking on my math. My math ain't that great, right? You don't got to be a mathematician or some mental genius, but yeah, I'm not necessarily that good at math unless it has to do with counting money, right? Which I'm pretty good at. But yeah, so yeah, hopefully this whole experience this year with DXY has been very helpful to you guys. I know that, for me, it's been pretty stunning. This year's, last year was the most accurate year I had, but then we come into this year and it's like this year blew last year out the water, like by miles. Like it's insane, especially in my private group, because we're doing it every single day. I don't think there's been even 10 days out of the whole entire year where we were stumped like, damn, I really don't know what's happening. Like I have no idea where it's going. Like we've known, even if we started the day and it went against what we talked about, we have the process to get us back in line with things, which I showcase here on YouTube as well, on our one live call per week. Obviously, it's not all the time thing that we have to do, but when we do it, it's accurate. But overall, because we are rooted in that higher time frame, none of this has escaped us. The market's had a very hard time fooling us, making us surprised. Even though there's been a lot of changes and new administration and geopolitics and a bunch of craziness happening all over the world, Even with those things, our our process has been pretty accurate. And again, just like in my private group, how December is going to be pretty heavily focused on basically trying to get everybody up to speed, get everybody prepared. I'm gonna have that same perspective here on YouTube. Okay, I'm probably gonna drop more videos, more lectures, amplifications. I guess I don't even like calling them lectures. It's just amplifications to what should already be known, and different perspectives and how to use certain tools. Because I don't recreate things. I'm an ICT purist. I give him the credit because it's obviously deserved, well deserved. Because without him, none of us would be talking about this stuff at the end of the day. So, I'm not like all these other mentors that tries to rename things. I could care less about image. I care about what my charts say. My charts speak very loudly every single week. And, people that have been giving me their time, like you guys, it's also been speaking very loudly with you. I've had some students just from YouTube tell me that they've learned more this year off of the 2 live calls that I do than they've learned in the whole, 5-6 years of them learning how to trade, which is pretty shocking. It just tells you how shitty people are on the internet. They don't know what the hell they're talking about. Like, they should just not say anything, Like, they shouldn't be trying to teach people if they haven't been able to do it themselves, unless they're documenting their journey and stuff like that. It's a different story, but the internet's full of vultures and good people too. But in the financial industry, there's a lot of animals, so you got to be cautious, right? And if I can help it, if I can do my part in protecting certain people that do give me their ear, I feel like that's something that I am very excited to do, and I appreciate all of you guys that have supported me so far. I'm gonna definitely throw this reminder out one more time. For those that may have hopped on in the last hour, don't forget to like the video. It does a lot for the channel. I'm not sure how all of you guys found me, but it was probably because it was recommended or Instagram, or word of mouth. There's a lot of that. But yeah, if you guys like the video, it helps YouTube know that what we talk about here is worth listening to. And I think the charts kind of justify that pretty much everything we talk about, unless it's like a world opinion, right? Because it's subjective, right? You guys have your own opinions. When it comes to trading, there's not many people that could do it like us. I'm not like everyone, obviously, showing you guys my bank account, right? And what I spend my money on. But putting 2 and 2 together, you could rub 2 brain cells together and watch a live call real quick and see that it goes right to where we're talking about every single week. And you can kind of make a determination as far as, that type of stuff. The internet's crazy too. So, you don't really want all your personal business out there, right? But that's not going to stop me from trying to help you guys, right? And I appreciate you guys that appreciate what I do, even though I don't do the same stuff that everybody else does for marketing. The main reason too that I don't do that stuff is it obviously attracts the wrong people, because I don't like signal junkies. And if they're signal junkies that hop on, they can just leave right now, or just whenever they see this video. I very much have been hurt in this industry by people that sell the dream the way that some of these people do. And even if they're like really, really good at what they do, what is the real purpose as far as why they're being so materialistic? Like what is the real root cause of it? Why do they have to come out here and show every single time that they're making $10, $20, $30,000? Why are they doing that? Why are they flexing all these materialistic things on social media? A lot of times it has to do with because they lack something, so they need validation. Only person that validates me that I care about is God. Okay, anything else is just do I really care? I don't. Right? Or they're just, trying to build a following and whatnot, which is understandable. But again, even if I personally built a following off of that type of behavior, I'm not going to want to work with people. I'm very close to the people I work with, especially in my private group. Like, we all have a relationship because it's exclusive. It's kept pretty small, right? I don't want to have thousands of people join it. I want max maybe 100, and then even less in terms of one-on-ones. Maybe more than 100 if it's just like hopping on watching my live calls. But when it comes to one-on-ones, I keep it, 20 people per quarter, depending on the progression from the last group that I worked with one-on-one. And I'm sincerely trying to help. I want to have a relationship with you guys. I want to make sure that I'm able to serve you guys as much as I planned on serving you. I'm not here to toot my own horn, right? My charts can do all the bragging for me, right? My main goal is to help those that want to listen, those that really take this serious, those that are not swayed by materialism. I mean, we're all trading to make money, to have better lives, to do what we want to do with our life, our money. So, I mean, why we don't even really got to mention it, And when someone's teaching concepts, that should be the focus, to learn the concepts. So then you can eventually have those goals achieved. But I don't know. I got hurt badly by people that do the whole lifestyle marketing thing. And so I promised myself and God that if I came out and was going to teach anybody, I was not going to be that way. And I would stay humble with it and never change my persona for likes, And maybe that's detrimental to the page growing, which, that'd be unfortunate. But at the same time, I'm keeping all this stuff very exclusive. Of course, I'm going to have my YouTube channel. But yeah, that's kind of how I feel about it, and that's why I don't do any of the lifestyle marketing. I show 3 times a year, big days. Like this year I've shown, if you go to my highlights, under results, you scroll through it and you'll see 10,000, 20,000, 15,000. The proof is there if you look. But then again, I'm not going to shove that type of stuff in your face because my money can't be spent by you. The way I live my life, the things I do, that doesn't make you a better trader. What does is listening to how I'm able to do what I'm doing, how ICT does what he does. That should be the main focus for everybody. But unfortunately, that's not how the world works, right? But if I can control, my page and my community, I'm going to do so, because I want the best of the best people to join. And doesn't mean that everyone that's inspired by those materialism things, we all like nice things. Who doesn't want to buy a Lambo, right? Who wouldn't want to buy a big house, have their whole family there, have a bunch of kids, live a crazy life with a bunch of Rolexes and all that? Who wouldn't want to do that? If they had the chance to, and if it was reasonable within the money you make. Who would decide not to buy some nice things? I just don't necessarily see a reason to shove it in people's face, even if you can do it. Because, for me, it was more discouraging than anything. Because at first it was good. Like, I was like, yeah, that's what I want to do. But then once I realized that it's a lot harder than it looks, and most of these people are frauds. They don't know what the hell they're actually doing. They just rent cars and all this stuff to make it seem like give the illusion of success. I mean, it was really, really demoralizing. I had to sit for, a long time trying to break that mindset. The whole material thing. Like, I want to make 20 grand in a day, 20 grand in a month. And I just started, right? Like, it took a long time to repair my mind from that. And I don't want to have to be a reason someone has that type of same feeling, because I don't lie, right? It's going to be hard. This is difficult stuff to do. It is arguably the hardest thing to do in the world to make easy money. It's the hardest way to make easy money. Does that mean it's going to take you 10 years to do it? No. Especially with a community like this and the things that we do. Does that mean that, you won't be successful, right? No. It just means that you got to have the right mindset, and you got to be relaxed. The less aggressive you are, it's a very weird dynamic, right? The more you push to try to do something in this industry, the more, like, to hit a specific goal, monetary goal, within a specific amount of time, the harder you push that, the further away it goes. I don't know if you guys have seen this meme where it has like this dude in a suit. It's all ripped up. He's got like one shoe on. And he has like a fishing pole or like a stick on his back and is dangling money in front of him. Right? And it's like the harder he grabs for it, the harder he pushes, the further away it bounces away on that string. Right? So it's like he's just trying to reach for it as hard as he can, but he can't get it. That's kind of true in this, you know, because when you push it so aggressively, you're going to be doing irrational things, right? Like if you're trading from a place of, I have to do this, or my life's going to be over tomorrow, right? Or if, you know, like I have to do this to pay my rent. I have to do this to do this or do that. In the moment, especially if you don't have that much experience, again, it'll damage you like it did me, right? But the moment I sat down and was like, all right, well, money's a byproduct of learning this skill and doing it correctly. Okay, so what if I just silence some of those thoughts and demands that I have to do this quick, because clearly it's not going to happen quick. You know, it's not going to happen quick for some people. It does for some, doesn't for others. You know, it took me 3 years to really see consistency. You know, it didn't take me that long to stop losing so much, but to keep the money, that's what it took the longest time. How to do that, and all of that had to do with mindset. You know, ICT himself says technically you could learn all the stuff within a year, right? You could learn how all the different elements and vocabulary and how certain things work. You know, if you have enough time to dedicate every day, you could learn all the concepts, be a library of ICT concepts in less than a year. Well, I wouldn't say less than a year, maybe a year and a half. But that's just like one part of the battle. That's like 25% of it. Right? Then you got to have money, obviously. You got to develop your relationship to money. So you can, you know, when you see money flashing on the screen, you're not going to be panicking because, you know, maybe $500 is showing up on your screen. And $500 is like maybe half your bills for your house. And you're attaching that significance to that $500. $500 is like a piece of dust, if that, in this industry, like possibilities. So there's like a reshaping of your mindset related to how you view money, a restructuring in how you see risk, right? Like a development that has to come with, or that comes with sizing up, right? So you got to start low so you can get used to it while you're developing that relationship to money, to your model. You got to also obviously build your mindset around the experience you gain. You know, you don't want to go into tilt every single week, every day, because you take a loss. Your relationship to failure needs to change. Your definition of failure needs to change. So there's so many things that end up making this take longer outside of the technicals, right? And that's what people don't anticipate. That's what I didn't expect. So as a result, I did stupid stuff. I developed horrible habits. And I had to really work on myself and step away from pushing to try to make money within that first year. Because the first year I lost $24,000, money that I did not have. I was getting loans, you know, my whole entire bank account was drained. I was a new father. I lost my job at that time. You know, COVID was happening, you know, to add on top of everything else. While I was doing this, COVID then started to come out, right? Because August 19th, or August 7th, 2019 is when I discovered trading. So yeah, so it's been 6 years, you know, but that whole, what the hell was he doing? He's over there messing with something. But that whole entire first year, I mean, it was hell. And it was not because of the market. It was because of my mindset. Who was influencing me? And this is what I mean by I was hurt by these influencers and their lifestyle marketing. And that's why I just refused to do that, because I could easily do it. You know, I did it at the start, but again, I noticed that there was just the wrong people. I wanted sincere people that wanted to actually listen. They actually wanted to pay attention to what's really going to make them successful. You know, what I had to go through and what they're going to have to go through and how to fix problems. You know, what to expect. What are the problems that you don't see that are going to show up later? You know, which ICT does a wonderful job of highlighting for us. You know, which is why, you know, I try my best to keep that part of my persona as a mentor as well. But yeah, for some people it's going to take longer. Some people it won't, right? Some stuff will stick longer or quicker than it will to some. But regardless, you got to just make sure you focus on the right things, and all of you guys will get there. You spend time here. I mean, you're going to get clarity. That's what I can guarantee you, especially in my private group. If you invest in me as a mentor, right, and you want to be on a one-on-one type of vibe, and have a more catered to handheld experience, I mean, with somebody that knows what they're talking about, obviously it's pretty helpful. It's not for everybody. I'm not encouraging everybody to think that that's for you. It's a big commitment. It's something that's really demanding, and I demand a lot. Just like how ICT demanded a lot too. But again, even on this YouTube channel, I try to be as supportive as I can. If you ask me questions on social media, I try to answer it. If you just join the private group for the tier 1 element, and you basically just want to be part of the live calls every day, that's also extremely helpful if you like these calls. My students have told me to add one that's even more reasonable than the already reasonable barrier that's placed, so I can get everyone that's actually serious about learning. But it's even now more even more accessible now with the different tiers. But again, even people just on YouTube like Fritz, like Tony, like Chawezi, right? Like a handful of others. I pour out as much as I can to help you guys in all these different aspects I've just been talking about: mindset, risk, organized process. So just being part of this group is going to help you get clarity, and hopefully you guys take to heart a lot of the things that I mentioned that you should focus on, right, and be aware of, because not everything's about technicals. Not everything is about where's an entry, how do I call the bias, right? All these different technical things that we do, they're great, they're part of it, but none of them will work if you don't have a focus and a plan and a process to manage your mindset, expectations, and have the realities of what trading really is. It's not a overnight success. It's going to take you, 3 to 5 years to become that overnight success. It may take some longer because of their inner issues, right? And only you can, determine how long that's going to take, because we all have different issues, and that's what makes this so hard. But hopefully you guys have gotten value from spending time with me this year. Let me go see if I missed any questions before we move deeper into this. If the daily and weekly are running as we discuss, my eye can with comfort look at the... Oh, okay. Yeah, no, that's a fact. Fritz talking about the higher time frame importance. Yeah, that's definitely, because you're confirming that lower wave, that smaller wave with the bigger wave. Because the bigger wave is going to crash on the smaller wave and it's going to overtake it. It's just going to be part of that bigger wave. It's kind of what the higher time frames are doing. The higher time frames moving in a direction, the 1 hour or lower time frames may be retracing a little bit just to, maybe present like a wick in a daily candle. But overall, the larger wave, being the uptrend in this example, it's going to overtake that 1 hour, that lower time frame. So if you trade on the time frames that you referred to, Fritz, or anyone else that refers to, the lower time frames too, if you allow the daily chart and weekly chart to be your starting point, monthly chart too, if you can narrow that down, you have the larger picture. So you won't be fooled when there's a retracement like this that happens. You'll be able to still stick to favoring that one side, the one-sidedness, like ICT says. Because again, it takes a lot to change the direction and price. Because if you're looking at the higher time frame, there's retracements in a bullish trend. There's retracements in a bearish trend. But in the face of those retracements, you got to make sure you have a process that allows you to not be fooled. You have to have an understanding that doesn't allow you to be fooled when it's simply just a retracement, right? To then continue the rampage that it's on. And hopefully you guys have been cultivating that skill, or hopefully I've been able to cultivate that skill set within you guys, at least get you pushing in a very positive direction related to that. Presh said, some may even have the so-called track record, but try to rebrand. Yeah, oh God, I can't stand it. I can't stand it. It makes me sick. And they don't know how to transfer the knowledge. Yeah, just because someone can show that that's a great point. It's a fantastic point. Just because someone's showing on YouTube or anywhere else that they know what they're doing for themselves doesn't mean that they're able to come down to where the students are at and get them to march forward in the proper way, or to navigate ICT's concepts in the proper way, or communicate certain things that ICT mentions that may seem confusing in a more simplistic, to the point type of way. And ICT's, I'm not gonna knock him. Obviously, he's gotten to the point a lot recently. For years he didn't, though. He did it on purpose. He admitted it, because he didn't want people stealing his stuff, and he didn't want lazy people to stick around. So he did these long-winded videos for hours. And so anyone that's not serious, they're just going to be, oh, I can't take it. I don't have patience. I'm out. And that just filters out people that are not going to be successful. If you can't sit through a lecture where there's value being provided, and I guess the mentor sharing some experience that's going to be helpful to you because you're in a pursuit of trying to find out how to execute or whatever the goal is, you're not going to be able to succeed because impatience is going to be a problem. That tells you right there if you have an impatience issue, if you can't sit through a lecture when there's good stuff being talked about, right? And that's most of the TikTok brain population that we've been plagued with for this generation and my generation. I'm 31, so millennials, right? It's unfortunate. You want to know something? It's off topic, but you want to know something very interesting? Me being 31 puts my age group basically as the last generation that didn't have a phone in their childhood. So everyone that's beyond when did phones come out? Did it come out in the 90s or the 2000s? I can't remember. Maybe I'm wrong. But I'm one of the generations, right, being 31, that had to come in when the street lights were out. They had to go outside and play. They had to go do stuff, besides just being on a phone. I thought that was a fascinating thing I thought about this week. It's kind of a sad thing, right? Especially because attention spans are like a gnat these days because of social media. I mean, it's just no, and people can't have conversations. They can't, it's hard to connect with a lot of people because they don't have that characteristic anymore, and it's really sad. It's been stripped away, but yeah, it makes me sick when they try to rebrand stuff and they can't transfer knowledge. Sorry, I went off topic. Per said, even since I found you, I get myself very in tune up with the weekly price delivery. Yeah. Presh, I'd like to hear more about that. Maybe if you want to share it here and we could talk about it, or if you want to just DM me on social media, on Instagram or something, I'd be happy to listen to some of your story. If we haven't talked already, maybe I just don't recognize the username. I appreciate you sharing that. Fritz said, can an order block? Yes. 100. Every single PD array can invert. Okay? Like a breaker can be an inverted breaker. You just take that breaker candle. Once it breaks above it, say, where's a good example? Maybe I could just paint one, right? So yeah, if you see this should be a breaker, right? Well, if we break above that, this breaker candle or down delivery can become an inverted breaker. You'd also have a fair value gap in there to couple with it too. And then of course, once it breaks up above this, you now have a low or a high, low, higher, high sweep of the lows. And then you could basically use this as an execution there too. So there's many points, even if you see a breaker get violated, right? An assumed breaker. It's a great way to also kind of gauge price delivery when things are breaking. Because if a order block breaks, right, say it's like this is a bearish order block here, say this up candle here, right, and when it breaks down below it, it breaks above it. Well, that up candle, if you go down to the lower time frame, it may end up presenting you with something like this, right? Turn into a bullish breaker. That up candle may look like a 1 hour order block. If you go to the lower time frame, it may look like a breaker. But again, to answer your question simply, when it breaks through that, right, and it comes back down into it, right, the area where we would use this as a breaker or an order block, all those levels invert. Presh, I am on X. I do have some stuff on X. I don't really post as much as I probably should. I probably should start posting more on all platforms. I'm just kind of lazy, you know. I'm not gonna lie, kind of lazy with it when it comes to social media. It's probably something bad. I've been knowing I probably got to fix that. I have the tools to do it. I have the time to do it, but I don't know. So I'll probably fix that this year. It'll probably be one of my goals. Be a lot more active. I kind of just been focused on YouTube and Instagram. Done pretty well on Instagram this year. I think I started this year with like 500, or was it 500? No. I think it was like 1,500 followers, or what do they call it? Yeah, followers, I think. Yeah, on Instagram, and close to 6,000. It's not that crazy, right? It's not really that much, but people have seen the value, because my Instagram is basically a psychology archive, and some of the clips from YouTube, things that I think are important from these calls. But yeah, it's pretty much what my Instagram is. It's just literally a psychology archive of ICT's best information or things that have helped me, that I felt were impactful from some of the Twitter spaces he's done. Sometimes they're from videos too, where he talks about psychology, but I also add some stuff about technicals too whenever he talks about it. But yeah, I'm definitely on X if you guys want to follow me on there. It's kind of a small page, but it's all right. Fritz said, because we are one weekly candle away from equilibrium on the monthly. Yeah, you're talking about this asset, BXY, and that keeps price inside fair value gap of April 2022, turning to an inversion for value gap. April, I think that's a little bit far off. You don't really got to concern yourself too much with that. I think I see what you're talking about in here. I think that is a little far just because we're on such a higher time frame. I mean, you could refer to it obviously, but remember, that's something that is not as significant as the things that are relevant within this perspective. You don't want to be too pulled all over to think that you got to be back like seeing things from 3 years ago. It is helpful, right, if price gets into those kind of levels, but you don't want to make that like a crazy focus. For back testing, you could use it, but if it's near term, you definitely want to focus there, right? And of course, I didn't really mention it, but hopefully you guys know that this is pretty much review, right? So when we're looking for our liquidity pools, you want to look at anything that's in close proximity, but first and foremost, the current high and low and the previous high and low. And maybe, if something's close like this, or like this, or like this, some of the more recent highs and lows that are reasonable to be targeted within, the next couple of weeks, couple months. But yeah, Fritz, that's a decent observation. I'm not going to push you away from that, from looking at those types of things. I just do want to make sure I remind you that, the things that are relevant here, they're going to be much, much more dynamic and important to go off of than something that was from such a long time ago. Obviously, things don't really expire, right? New week opening gaps from 3 years ago, if price comes back into those levels or fair value gaps or order blocks. I mean, well, not so much order blocks, but like fair value gaps, new week opening gaps, you know, I wouldn't even say breakers. I wouldn't even drag breakers over from years ago. But yeah, new week opening gaps, fair value gaps. I mean, if you drag those over to the current time from a couple years ago, if you wanted to do that, it's not really necessary in my opinion. I don't do that, but it is something that can be a useful study when you're studying how things refer to those older levels. But yeah, I'll just make that clear that I don't necessarily do that. I've done that type of study though. I have a whole folder based on like old PD arrays and old price delivery and how it impacts current. But it's definitely, we already have kind of enough to kind of look at when we're live, or live trading, I should say. In terms of like the current price delivery, we basically have enough to go off of, and we don't really got to concern ourselves too much in the moment with things from such a long time ago. Again, that's not a discouragement for you to not do that study, because I've done that study. I don't really do it as much anymore, because it's just kind of not really necessary, at least for me, right? But yeah, I don't want to discourage you from doing that study, because it is helpful. But yeah, if we go to the monthly chart, what do you guys see here? Right, again, high and low. Every time frame you get on, you look at the high and the low. Okay, you always got to look at the high and the low, the current candle and previous candle, and anything that's close, right, from previous weeks or previous months. Same with the quarterly time frame, right? What did we do? We took out previous quarter. This whole quarter recently was literally just used to give us this retracement. And if you look at this higher time frame like this, I mean, doesn't it make sense that this displacement led to a retracement? If this was the 5-minute chart, this would be totally logical that they declined aggressively. Now they're retracing. We have accumulation, manipulation, distribution. Now we have redelivery, right? Or rebalance, retrading to the imbalance or the first distribution. And now we're getting that rebalance to potentially redistribution, right? Or redelivery off the heels of this. Now, if we were to take out this on a quarterly perspective, say a big candle happens and we get up above that, that would be pretty significant to try to see price go higher more long term. We may not be too bullish long term for the DXY. We're just going to have to see on a quarterly basis. But yeah, this is what the current quarter looks like. And we're reaching into a quarterly bearish order block too. So I think I can actually... Yeah, we definitely want to keep tabs on that, because once we get up there, it may be pretty reactive. We'll see. But that's still kind of a ways away. Well, not really, huh? Not really too far. We also have this wick in here, so we definitely want to keep tabs on that. Okay. It's a monthly wick. Where's my monthly wick? So yeah, we'll keep tabs on that, see kind of what price wants to do with that. And then of course this quarterly bearish order block is also a bearish breaker, which we used all throughout the year this year as a responsive level to trust that we were going to keep going lower. So we'll keep that in mind as well. But yeah, so price is pretty much turning up unless it violates the down candles, right? The order blocks, unless it changes something dramatically. We'll continue to try to see if price can continue to reach up. Maybe it reaches up into this, right? This quarterly order block up here, bearish breaker as well. We'll keep tabs on that. Unless this low is violated, which is the weekly order block, unless that gets taken out, we're going to keep having interest to see this go higher. Okay, there's really no reason not to, you know. Besides the fact that we swept out this high, we called this reaction, right? When it was reaching up there, I said, watch the response here. It's probably going to retrace. And it did exactly that. What did it retrace to? The exact level that I pointed out as well during that time, the weekly fair value gap, the bullish order block. And I said that unless it breaks through it, we're going to keep trying to push this higher, try to see if we can't get it to continue. And we can see that it's pretty much just continued its delivery to the buy side. Now we got this fair value gap in here, just to keep this moving along. Appreciate you guys listening and indulging what I've had to say about all these different things we've talked about. You know, it's not always about technicals, but yeah, appreciate the patience. I promise I won't keep you here for the whole hour. Right? We'll get through this, unless you guys got questions you want to talk about, because then we can go over that. But yeah, so we'll see how this behaves. So if price was to do something like this and break down, get below this, this would be what I'd be watching for if I was going to try to go short or try to see the DXY go short. Preferably, I'd like to see us run up here one more time. But unless this was to happen, right, I would not be looking for this low. I would not be looking for shorts. We don't pick tops until it proves otherwise. Right? Even though the monthly chart still shows that we may be retracing to go lower, we don't know exactly when that's going to decide to do that. For now, order flow is bullish on this daily chart. But if it does do something like this, right, because we have that monthly chart identified as a potential retracement to go lower, we'd be able to get back in line with something like this. But this is what it would take for me to decide that price is going to go lower now instead of continuing to run to the buy side. All right. And so what I'm going to expect, or, you know, potentially try to expect, I'd like to see something like this happen. This is Friday's low here. So that's liquidity. We have a PDA right here. We have sell side, buy side, possible order block being formed. Okay, this down movement. So the 50% of this, we shouldn't see this whole entire fair value gap get traded through. Why? Because we have sell side delivered, buy side delivered, right? Displacement to the downside, displacement to the upside. So we should be able to see this reliably hold in price above the 50% of this wick, or of this fair value gap. And then we should be able to try to target some of this, these upper liquidity pools up here. Okay, and then, you know, we'll see if we can't get something like this to happen. Okay. Taking out Friday's low. So we'll mark that off too, just as a reference. Where's Friday's low? Friday's low. And then we got Friday's high. It's also a previous week's high. So I think I'm going to stick with that. Previous week's high. All right, and then previous week's low is down here. That's not really of interest unless we start to disrespect this. So all of this is what my attention is. Okay. And we got a high up here too, so let's actually add that. Yeah, this is like a new quarterly high actually too. But we'll mark this off as previous week's high. So yeah. So it's essentially what I'm going to be paying attention to for DXY. And of course, if this continues to happen, we should then continue to see this stuff drop. Before I move on from the DXY, do you guys have any questions? If you don't, throw a 1 in the chat or say I'm all good. Just let me know real quick and then we'll move on. snap. Let it drop crap off my desk. Almost dropped a bunch of water on the floor. Sheesh. Alright, cool. Alright, so looking at the... Let's actually do something we haven't done yet. Let's look at the quarterly chart for the currencies. So we do got this little inversion fair value gap in there. It's definitely something to watch. Yeah, we came literally right into it. This low of this candle, this previous candle, it's basically tapped into that. Honestly, I think instead of that, got the 50% of this here. So we'll keep that in mind. Just keep that as a reference. And we got sell side down here. I guess that's from August. This low down here is from August. So we got sell side down there. If DXY goes higher, we're gonna probably attempt to try to get deeper into this. Got a weekly wick in here. Let me actually pull that over so it's more clean. So you can kind of see like a bigger picture of what's happening here. We may look to continue to use this weekly wick here. If it breaks down below this weekly wick, we could probably look to dig a little bit deeper if DXY goes higher. And then yeah, we call that quarterly or the higher time frame SMT up above these highs up here. We called it pretty early when price was getting up here as we were trying to decide, are we going to continue or not. And then we kind of talked about how, if it stays below the 50% of this order block, which you could see, we've had that marked out for a while, it would continue to just go lower. And then we had the gap in here and the relative equal lows, and we just slid right into it. Again, if you guys go back and review or rewind back to August, September, you'll notice that we referred to that. And then once it kind of committed and got back down below, this, right, and then did this, we can see the wicks were respected. A key indication for order flow is how price is respecting or responding to the wicks, right? Midpoint respected, midpoint respected. Is that bullish or bearish order flow? That's bearish, right? Same here. Up wick, respected. 50% never got traded to. Up wick, even the baby one, 50% was respected. That's algorithmic. This large wick up here, what happened? It displaced above it, or wicked above it, or above this candle's open, tapped into the 25%, could not reach the 50% while there was SMT, and then we got displacement. So that's a pretty heavy indication that we were not done trying to continue to reach lower, at least for a little bit, And then we got this wick here, right? So it's really worked the quadrants. If you notice this, it's really worked the quadrants of that large wick up there. You see the significance, right? And we have, again, the August low. So if it's going to be targeted, these are some of the contextual ideas that we could use to continue to walk that lower. I would say that unless this high is violated, we'll continue to try to see this go lower. Validation right there. So yeah, we'll keep this level here. I'm gonna actually shrink this up a little bit, get a little closer to price. So you may be wondering, when I place this, why? Why that range? Why not this low to that high? Well, we've already had a pretty significant run on stops to the buy side and then displacement taking out sell side. So now we have a new dealing range. When buy stops and sell stops are taken, that creates a new range of opportunity or a dealing range. So when that's the case, if we're going to go lower, which is what I would like to see if we continue to hold this price action here, and DXY keeps going higher. If that's the case, then again, this high to that low, that's the range that we would be looking for a potential, retracement into, and then a redelivery. If we break down below this, again, we have one change in state, secondary change in state if it breaks down below this, right? So then that should be, pretty significant, especially with an inverted fair value gap here or a reclaimed bearish or bullish bearish fair value gap. This is a bullish one right here. So if we invert this stuff, that'll be an inverted FVG. Double change in state. You can see here we got a low, high, lower low, so we got a bearish breaker. Then we also have the little wick in there too. So we have multiple levels in this area that should hold price. So if it doesn't, what happens, right? Say it displaces up beyond the 50% of this order block. We have a fair value gap in here. We have another fair value gap in here that may act as a support level. We have a invalidated bearish breaker, and if we get up here, like I mentioned, that'd be an invalidated bearish order block. So in that case, right, if that was to arise, if that scenario was to arise, if we saw that, that would be our invalidation point overall. It could go up to the 50%. I mean, I could move this down to here. We are for certain, right, this is like the first sign. For certain that we're going to change, like the sign that makes us certain would be to break above this high. Because then we'd have a failure swing here. We'd have a high, low, high failure swing. Failure to break that low. Breaking above this high would set the stage for us to then target these upper levels using the concept called a type 2 dealing range. Type 2 dealing range reversal. And that, that would be also supported if it gets above that to continue going higher by the SMT here. And the fact that we were inside of a higher time frame fair value gap too. So the origin of that, breaking above this high, that's how I would justify getting away from this huge decline. That's how I would justify getting away from continuing to go lower and then adjusting to being bullish. Unless that happens, what's going to be my opinion? Right? I'm going to just keep pushing price to the downside. Yo, what's up, Byron? What's up, Byron, bro? You're freaking late, bro. What's going on? Come on, Byron. Like, dude. Yeah, it's good to see you, brother. But yeah, so does all that make sense, what I've just mentioned? That's basically my invalidation process. The validation, invalidation, right? Just relative to this, right? It's the same type of process we would use for every asset, okay? So yeah, hopefully that makes sense. So we're going to watch that. It's not a monthly. It's a daily. Yeah, daily wick. Daily wick. All right, so I mean, this just looks picture perfect. Buy side's taken, sell side's taken. We're back inside the range. We're at the high of the fair value gap that may be reclaimed and continue to drop. If we get down below that, say we get down below this and break this low to that high would be classified as a balanced price range. This low here to the high up here, that should be classified as a balanced price range. So again, because breakers and order blocks are balanced price ranges. So that's just further evidence as far as or logic as far as why this area in here should not be traded into. And if it is, we got to be considering the fact that it may change and it may not continue to drop, even though we've been so aggressive. This would be early signs of something changing on the interior of the market dynamics. Okay, so yeah, I'll leave y'all with that when it comes to the currencies. And that the continued decline supports or is supported by this assumption here. And if something changes, obviously something changes, and then we'll have to make an adjustment. But I doubt it at this point. The dollar may continue to rise aggressively because of the Christmas rally, because lots of commerce is being spent. We'll see, right? We'll see what happens. Dollar's been heavily manipulated to go lower for trade purposes. The new administration came in and basically, that was their focus, to try to help out exports for our farmers, right? Just the cost of trade for U.S. suppliers becomes cheaper for whatever reason, or not for whatever reason, but that is the reason that it's been so manipulated, at least from what I've been able to gather. I'm not an economist and all this crap, but that's just that's what I've heard. That's why the dollar's been going lower. It's not because the whole entire economy is collapsing. It's not because this or that. It's just been simply because of trade. And Trump is a trade lover, right? A deal maker. So it's kind of been his focus. So for those that may be wondering why the dollar's been tanking all year, it's pretty much the purpose. They wanted to pull it lower to benefit exporters. All right. So yeah, hopefully all that stuff makes sense. See, the invalidation here just opened my eyes a little bit more to the 2022 model. Ding, ding, ding. Right? When you're in a trade, this is also helpful when you're on the 1 minute chart. Right? The validation principles that we use, like what you just saw me go over, it could be used on every model, right? At least the way of viewing the PD arrays and how to consider things. Includes the 2022 model, absolutely. Market structure shift is an invalidation of a number of opposing PD arrays. Absolutely, Presh. Absolutely, bro. Absolutely. 100%. Ding, ding, ding. Big time light bulb right there. Right? So I'm glad you pulled that away from what I just mentioned. Right? So yeah, and it's good for lower time frame and higher time frame too. It's all fractal. Everything I talk about here can be applied to the lower time frame. Okay? But yeah, with that being said, hopefully all this stuff makes sense. I'll let you guys go and do a deep analysis on maybe the euro if you want, but hopefully all of this is clicking right now. We have this decline in here, right? Or this rally up. Oh my God, these freaking ads are crazy. So annoying. Better not get copyright strike because of these stupid ads. But yeah, so we got this run higher here, this up candle, displacement. If we create another run higher and then it displaces again, that would be potentially a double change in state of delivery. Similar to this, right? We had a run up higher here. We had a rebalance effect or a retrading effect back into the decline. Once it got back down below this, what did it do? It kept going. Right, got down below it here, retraded in with this wick one more time, and then just continued to drop. So we're below this daily fair value gap here, which is an inversion fair value gap. It's a 2-day. So we got a fair value gap here, traded lower, traded back above it, and then we traded back down below it again. We tried to attempt to get back into it one more time. That right there is a variation of balanced price ranges. When a fair value gap is treated like this and it pushes away, you could treat this as a level that price should not come back to. And if it does, it could a lot of times act as an invalidation element in price. Right? So just another little gem for those of you that it's we've talked about this before, but just another reminder, and we're going to literally use that to continue to justify a run back down to August low in the euro, assuming that the DXY is going to keep going higher, which we already kind of discussed as far as why I believe that. But yeah, so let me know in the chat if everything makes sense so far, and if it makes sense, we will move on to the indices. We've seen the move up, then down. Yeah, we literally painted every single piece of DXY this year. I don't think there hasn't been 1 week that DXY has not been called to a particular level within a specific narrative. It's been, I mean, and the proof is on the YouTube, the YouTube channel. I've literally did it all year with numerous witnesses, including you guys. Some have stayed, some have left for whatever reason. But that's the nature of this industry. Can't save everybody. Okay, appreciate you, Presh and Fritz. Appreciate you guys. All right, so now with that being said, we'll move on to the good old indices, right? So yeah, those of you that have been with me for a while, this gap down here, let's make it a little bit more obvious. This gap down here, this old new week opening gap that basically had a big decline here and a large gap that was left. It failed to really break into it. When it left these equal lows, I said we got to make sure we watch that because it may be able to come back to it next time because they don't like leaving gaps open. Right, so it took us all the way up into here. Because we kept our eyes on that, we were able to use it last week. Well, in this whole decline, we were able to use that for 3 straight weeks as our draw on liquidity overall. And it served us very well. And then we finally got down into it, which was very satisfying, if I do say so myself. We also had this regular trading hours gap up there too. If we go to the regular trading hours, I did try to see if we could tap that before price declined, but it didn't. So you know what that tells us? If it doesn't reach into a level like that and continues to rage to the downside, we're overwhelmingly bearish for whatever reason. Tony said this was the best find of 2025. This trade idea? I appreciate you too, brother. I'm glad you've been having some heavy impact. You're one of the students on YouTube that's followed me from literally pretty much the week that I started doing things live on YouTube, and from then up until now, Tony. I guess I don't even got to ask the question. How has it impacted? I mean, you've shown so many accomplishments. I'm super proud of you, bro. It's amazing. You're a testament, along with a handful of others, a testament to this community. You know what I mean? A testament to the things that I talk about, the stuff that we do, a testament to ICT and his amazing concepts. And if you just, put your head down and just continue to grind, come and borrow my experience. I'm lending it out. And, you'll see results, in terms of clarity. But it's up to you personally to get to the profitability stage. That's how it is with every mentor. Unless I'm taking your trades, I can't guarantee anything in terms of profitability. There's no guarantee of anything ever, except clarity and reading price action, right? I could teach you that. I can get you to have clarity with that. You have to take on the risk. I don't encourage anybody to trade live, right? That's going to be a decision you make. And if you feel comfortable with your skill set after you've learned some of the stuff that I teach and ICT teaches, and you feel you're ready, then you would make that decision. You would make that decision, not me, because I'm not a financial advisor. This ain't financial advice. But the stuff that we've talked about has been provably effective, not only with me, but just in general, with people that have put their head down, like I said, and focused. So Tony, I'm really appreciative that this has had that impact on you. Keep sharing your journey with me, bro. I'm always looking for the messages you send, because it's always something good. And even if it's something bad, I know you've shared that a couple of times too, where you've had some ups and downs, but you've made it out of them. You're going to keep making it out of them. And in order for you to get good at getting at a drawdown, in order for you to trust yourself within the ebb and flows of winning and losing, you're going to have to go into drawdown and get out of it numerous times. I tell this to my private group all the time. The only way that you're able to trust yourself long term with going into drawdown and dealing with the highs and lows, you have to deal with the highs and lows. You got to go through it and get out of it. Stay positive while you're doing it. Believe in what it is that you're learning, because this stuff works. I prove it. I prove it every single day. Not here on YouTube every day. Every week I prove it here on YouTube, but every single day in my private group, I'm doing this every day. Some of them are on the call right now. I think there's like 2 or 3 of them here. And they literally see me doing it every day. And they're doing a lot of stuff on their own too, but it's priceless what we do here. Every week you're set up here on YouTube. There's one live call where we're talking about actually engaging, which you're able to borrow my experience there. But what we do here, the results speak for themselves. Seeing price do what we say it's going to do every single week, should hopefully be eye-opening, and it is definitely deserving of your attention. And it's because of God that this stuff is out there, because he gave ICT the skill set. I went to ICT, went through all his stuff, right? He's assisted me tremendously, along with 2 other individuals, in getting to where I'm at. And I'm grateful that I'm in position to also be that type of resource to those of you that give me your attention, because I'm not here to boast about myself like I had a big conversation about earlier. I'm here to sincerely get you guys to where you're trying to go, at least put you in position, so then you can take it the rest of the way. And that doesn't get achieved by me tooting my own horn all the time about like I made this, I made that. I do got to mix in a little bit of I guess tooting your own horn, you could call it, because, this stuff's, it's spectacular, right? And again, I'm not better than anybody, right? I'm not the best trader in the world. I make my own mistakes, but I do have solutions, and I do know what I'm talking about, and I prove it. And the results that you guys that stick with me, and those of you in my private group, you guys are a testimony to that. So it's something I'm really, really grateful for. So thank you guys for your attention. And, we're going to keep crushing it, right? Keep sending me your updates, whether you're in the private group or here on YouTube or, wherever you found me and watch me on, because I'm very invested in trying to see how far you guys can go, And at some point, right, the whole private group's going to be traveling to different countries together as a group, my treat, and we're going to come and see where everyone's at, all my one-on-one students. I definitely want to meet all of you guys, so I'm gonna make sure to set that up. Yasin, what's up, Yasin? I'm not sure if you've been here the whole time, but welcome back, brother. It's been very, very dramatic price delivery, very clean, that's for sure. The whole year's pretty much been pretty nice. But this last week in particular, last couple weeks, with this huge decline because of the shutdown, it's very predictable that they were going to tank the market, really. And you couple the shutdown being shut off, or the government being turned back on, mixed with the yearly Power 3, us being at the end of the quarter, right? The last quarter of the year. You could just kind of piece 2 and 2 together why prices decided to give this dump off. And I don't think it's going to change unless something changes, especially because DXY is rallying. We'll see if that continues. We're inside of this here for the NASDAQ. Right, we got that failure swing. There was SMT at those highs, if I'm not mistaken. I guess not. But here in the NASDAQ, if we go to the 2-day chart, 3-day chart, I talked about this daily bearish order block. You see the wick in here. You see this large wick, 50% is respected. We got a breakdown below this, a change of state of delivery. If we zoom out, we could see that there is a beautiful target down here. I talked about this back when we were in September with the first rate cut. I wanted to see if we could drop lower into that, then go higher, but it failed. So because of that failure, it really triggered our interest to keep going higher. and it showed that this was absolutely going to have a bullish impact from the rate cut. And as you could see, everything we predicted basically came to fruition. Rate cut causing bullish movement, heavy bullish movement. And I mean, it's been on a rampage. So we were pretty solidly correct. How far lower can we go? And it relates to potential yearly TGIF. So not yearly TGIF per se, but it's a yearly power 3, because the year has 4 quarters in it, just like how a month has 4 weeks in it. And for a monthly candle, right? There's the 4 weeks. The first week is generally accumulation manipulation. The second and third week, generally, those 2 middle weeks are the best expansion portions of a monthly range. And the last week is the cap of the monthly range. So it reverses. So it's the same thing with the 4 quarters in a year. The first quarter, sometimes into the second quarter, is accumulation manipulation. You know, the middle portions of the year generally can be part of the large expansion portion. And then towards the end of the year, like the last quarter, right? So the middle quarters are generally expansion. The first quarter is generally accumulation manipulation. And then the fourth quarter, right, the last quarter, which is what we're in right now, we're about to close out, that is basically generally can be a reversal, right, to pull back into the range. Does it always happen perfectly? No, it doesn't always happen perfectly on the weekly chart either, or the daily, or the monthly chart for Power 3. But the elements that are relevant to pay attention to are definitely there in some form or fashion. And right now, we could clearly see, like if we zoom out, let's go to the start of the year. We got January, let's take it from right here, okay? So this is what the yearly candle looks like right here. From the open, we had a pretty massive wick all the way down. The dog is just licking himself insanely. I don't know what the hell's going on. I wish I could show him on the screen right now. He's just laying on his back like he's living his best life. Must be nice, bro. Sheesh. All right. So yeah, this is what the yearly candle looks like. A big bullish candle. Kind of disregard the colors, right? Don't be thrown off by the colors. But this is basically what it's done. All right, so the whole last quarter basically ran up from what, September? Ran up to create simply to create the wick on the yearly candle, and then now it's pulling back. So this is what the yearly candle looks like. Right, we had accumulation, big time manipulation, which I narrated this as it was happening, and I called the low of the year at a yearly order block. This whole decline in here hit a yearly order block. If we go and look at see. Go look at this continuous chart. You see, I mapped that out. Yearly order block. And it was beautiful. I literally called I called bullishness at a time when the market was tanking and everybody in the news was thinking that the world was ending. Well, it is what it is. They're not going to fool us. It's too bad. Not anymore. Fool me enough. It's not going to happen. And I mean, it's just been amazing. This is an example of the precision this year. I literally called the low. And you can go back and review it, right? Go back to, what was it, April when that happened? You know, if you really want to go and test it out. Was it April? Yeah, March, April. And I literally called it. And I said, if we get above this, we're going to wait for another shift, right? Invert some fair value gaps. and then find a setup within this. Then we had an inverted fair value gap here. I said if we took out this high up here, it would be set to take this out. And then we painted out the market maker buy model. Right? And then ever since we've just been doing, just rampaging to the buy side. And we did the same thing in here. Right? Price came down. I wanted the gap in there. Right? That little fair value gap that's on this chart. Right? But nonetheless, again, all this stuff's verifiable. You can go back and look at it, but this is an example of the higher time frame power 3, right? The higher time frame ability to, manage even a yearly power 3, right? Because we did that the whole start of the year, the whole decline to start the year, accumulation, manipulation, distribution, and then now we got to the fourth quarter in here, and now it's consolidating. Right, so what was it, December? From December to March. And then March to June. And then June to September. And now this is the fourth quarter. September to December. So you could see all of it, right? This was accumulation. Accumulation in here, manipulation. Let me actually do this, because that's where it stopped. And then this has been the whole fourth quarter so far. So this is it, right? This is visually seeing the yearly power 3. You do the same thing for the monthly chart, like a monthly candle. Do the same thing for a 6-month chart, right? You can identify power 3. Just get the 6-month open. Try to break. How would you break down a 6-month? In 4. I don't know. Let's just kind of focus on the yearly, monthly, weekly, quarterly, because you could do quarterly power 3 as well. But you could see the 2 middle months or 2 middle quarters were the rapid repricing to the buy side, and then the two ending, right, the first and the ending one is being the retracement leg, just like if this was like a week, right? Say this was Sunday, Monday manipulation, Tuesday set the low of the week, Wednesday continued, Thursday rallied up, and then this hits a Friday for TGIF. I guess you could classify it as a TGIF for the year, but I think it's more eventful, more useful if you look at it from the lens of power 3. Accumulation, manipulation, distribution. Does all this stuff make sense? I've never really painted this out like in this way, so I'm hoping that this was pretty eye-opening, because every single year you could think about things in this way, and because it's a yearly, obviously, it's going to take a little bit more time to build that experience with it, to trust it. But, just 1 or 2 years, I mean, you can use this as an example too, right? Like this is an example of a yearly power 3. And now we're in the capping of the yearly range phase, or the reversal phase, retracement phase, to basically close the yearly range. And that's why it's had such a heavy decline in here. And DXY has been rallying. So people are liquidating their positions also ahead of tax season, because there's like a timing element. You have to liquidate stuff going into the new tax season, or the new year for taxes. Original consolidation at the magnet. I guess you could kind of look at it like that. If you look at this, kind of depends on how far it's going to shoot, huh? We'll see how far it wants to shoot down. It could. In that case, you'd use this as consolidation, accumulation, reaccumulation, smart money reversal. We do have a breaker in here, right? I did mention this to my private group when I was talking to them. I'm gonna actually save this. I want to definitely document that. It's definitely worth a screenshot, that's for sure. So you could take this opinion here too, or this tactic, and you can also slap a seasonal chart next to your study and go ahead and look at it, right? What parts of the year did what relative to that seasonality chart? You know, I have one of those in my private group and in my free Discord as well. If you're not part of the free Discord, definitely go and try to join that. If you have any problems, let me know. I don't know if it refreshed the thing, but maybe I have to make a new link, but just let me know. I don't know unless someone tells me, right? It doesn't just say, hey, it's expired. So, and I can't check because it's, you know, it's my community unless I make a fake account, but I'm not going to do that. But yeah. So yeah, this is, let me get rid of that. And yeah, this is what it looks like overall. I think if we got a 12-month chart. Yeah, see that there's our yearly candle, right? So yeah, very similar to what we painted, right? And the DXY had the opposite, which is pretty interesting. So yeah, I guess to keep this short and sweet, again, as long as we stay below these levels, we're going to continue to go lower. We have buy side, sell side. We've rebalanced the gaps in here that we've left, right? We had sell side, buy side with a wick, and then sell side again, and we're just really, really efficiently delivering with no gaps in price as we went lower. And price here has closed below this breaker low here, right? Or the close of the breaker candle. And we've purged out that liquidity. So if DXY keeps going higher, we want to see maybe a retracement that then goes higher, continuing the buy side delivery. And then of course, as a result, we should then be able to see this act as a drawn liquidity here, targeting this fair value gap. I'm not sure if we'll get excited enough to get down there. We do only have one more month for the remainder of the year. So we'll see. I mean, it's possible, depending on what happens. But we definitely got a massive liquidity pull down here. If it doesn't get to it now, it's going to get there. If all this stays intact and we stay below this, it's going to get there. Or maybe early next year. And then maybe that could be used as manipulation to then keep going higher too. Who knows? You know, we'll see what happens. But this is kind of my opinion. This is what I'm going to stick to. We have high here, low. Right, we got an order block, and we got a breaker here, like I mentioned, and we have that gap. So it's not unreasonable that they traded through and then sent price back through it one more time, because it's an inefficient price delivery down there. So to make it efficient, they have to trade both sides and then push away. So it's not fully, I mean, it's fully balanced at this point. So wherever it chooses to break out of, like if it breaks down lower. Not only do we have a breaker down here, which leaves all of this as a balanced price range above us, we have this traded to and through and then away if we get down below that. So we have this supporting us to go down, this breaker to support us to go down, the fact that this is a market maker sell model that was completed, which I talked about in my private group, which ended up completing, which also leaves a balanced price range. Little nugget right there. And then what else do we have that we can identify? We got a new week opening gap in there. That's what this gap is, right? So we'd be below a new week opening gap. And then we also have relative equal lows down here, right? We do have this consolidation, accumulation, reaccumulation, possible smart money reversal for this larger view. It may use this one, right? We'd have to kind of, you know, gauge, like, is it really going to get down there? We don't really know. So it's either going to use this as the original consolidation, or this one. But regardless, you know, we could still map it out, even if it uses this one and we use this one, or vice versa. because we got very much the same principles that we're looking to see. And if we're correct, we're correct. So it kind of just is what it is. Presh said the yearly, quarterly, and monthly ranges caps. Do you factor in 20, 30, and 40% of the range? So are you talking about like graded price swings? Because I absolutely think about graded price swings all the time, every single day, every range I'm in, even on the seconds chart. Because I think that's one of those things that everybody should try to master. You got to be able to grade your price swing. I talk about that a lot. I have a lot of, I don't know if I have it in the free community. I definitely have it pretty in great detail, breaking down graded price swings in the private group. But yeah, it's basically just kind of what you just mentioned, right? Getting the high extreme, low extreme in a range. If you map out a market maker model, you got your high and your low to grade the price swing, right? It doesn't matter what time frame you're on either, right? Like this, for example. Just got the low down here. 25% of the sell side of the curve, right? If you got the low and the high of the market maker sell model, take that sell side of the curve and you look, 25. Look at how it respects that absolutely beautifully. Align that with a PD array, right? Align that with the buy side accumulation, with the sell side distribution, and a PD array that aligns. And look how sensitive that is. Bang. 50%. Bang. Bang. It's not random that happens like this. And then we smash right through the 25%, creating second stage distribution. And as you guys know, that it's second stage distribution when it does that quick response. Notice that 50%, wow, this is a beautiful correlation here. The 3-day bearish order block open price is perfectly aligned with the 50% of the dealing range that was created, or the overall range, the graded price swing in this market maker sell model for the second stage distribution. How spectacular is that correlation? That is flawless. I didn't even notice that. I don't know how that got past me, but that's beautiful. I kind of just saw the order block, was like, all right, bang, it's going to smack. And it indeed smacked right to the level that we were talking about and saw for weeks ahead of time. And we used as a draw on liquidity for weeks, right? So I do see that we are at our 2-hour mark, so I won't keep you for much longer. I'll just leave you guys with maybe a couple more things. So we have this low, that high, and we broke down. So that was a market maker sell model. We've now completed the entire market maker sell model. So I don't expect us to go too much deeper than this, unless it's going to try to attempt to target these highs up here and maybe DXY tanks, and we have to readjust. But yeah, aside from that happening, if that doesn't happen, this was totally reasonable for them to have done this through, like they went to it, back through it, and now we're waiting to see, is it going to break to the downside? Because if it does, it's a balanced price range supporting down delivery. If we break to the buy side and it gets above it aggressively, then we're going to have to watch and see if that's going to be a support level to go to the buy side. We fully confirm that we're going to target these equal highs up here when this low and that high, if we violate the 50% of that range, because then the balanced price range, this low to that high, will be getting violated, and we'll have numerous PD arrays in this area getting violated to the upside, and so we wouldn't be able to hold on to sell ideas. And the higher time frame is what it is. I wish I traded the NQ. So, Tony said, exactly, and you marked it way before. Yeah, we saw foresight way before we even got down here. We were way up here watching to see if this failed. And then once it failed, we talked about this. I think this was in my private group where we talked about intermediate term highs, like when this turned to a long-term high, which ended up turning into a long-term high once this got violated and created a high up here. And then this became an intermediate term high, right? And then I said this shouldn't get violated if we're going to keep going lower. It came real close, but did it get violated? No. So what happened? It kept dropping. And we were in my private group here for it. I mentioned it in the free group too. But anything free, people don't appreciate for the most part. A lot of people do, like you guys, you do. You appreciate it. But most people don't. So they don't put value into it, unfortunately. Even ICT's concepts themselves, people don't appreciate because it's free. And that's sad. Because they'll go pay somebody 10 grand to teach them, and they won't even teach them anything when they could just come and, put a small investment into this group to make sure that we know that they're serious, or just simply stick on the YouTube channel and see results that are much better, much more clarity inducing, and much more predictable than pretty much 90% of people on social media, especially on YouTube, so-called mentors, right? Yeah. To each his own, I guess. They got to make money somehow, right? Because they can't make money trading, so bless them, right? Let's see. So Fred said 50% of the daily breaker sits nicely just above Friday's high. So I'm not necessarily classifying this as a bearish breaker in here. If this would have taken out this high and then declined, it would be a different story. I'm not necessarily seeing that as a breaker. I would see this more as a mitigation block. High, low, failure swing, breakdown below. So basically there's something similar. But more so it's an order block basically, right? This up candle here. So 50% of that order block, I mean, it's kind of similar in terms of what we're watching for price to do, or how it should treat it, right? Said it's a real understanding of price. Yeah. It's really I'm like how English teachers, right? Like there's a person that created English, right? Whoever the hell that was, right? But there's really, really good teachers that help people learn how to speak the language. Well, ICT is the founder of ICT Concepts and the Smart Money Concept language on reading price action. How to understand what price is communicating to us. And I'm like that, that teacher that knows what the hell is going on is also able to push the message forward, get students to also piece things together, and reach people that maybe he wasn't able to reach. It's kind of how you want to look at it. But yeah, it's definitely a real understanding. You're learning a language. That's the language idea or example is very important to understand, because this is why if you try to mix other people's stuff with ICT, or someone tries to reshape or recreate or rename or do all this other crap, it's like teaching someone English but trying to make it your own and mix in a little bit of French and Spanish and other languages as well. It's not going to make sense. I mean, it's just not going to make sense. You're going to be like, what the hell's going on? It's the same thing with this, So I think that's a good way to describe or explain why mixing stuff, why ICT says not to mix things, So don't mix stuff. Don't listen to idiots, right? So I'm thinking if price is going to resume bullish, it'll encounter high resistance from sell-off. I mean, that's a decent way to look at it. Keep this in mind, Presh. Every single time the price runs to the buy side, generally, generally, it's not all the time, but generally, in a downtrend, buy side moves are going to be high resistance. Sell-offs are going to be low resistance, right? Just as a blanket statement, right? Just something to look at overall. Anytime price is going higher and bullish in a bullish trend, anything that's retracing bearish is going to be looked at as potentially high resistance. But then once it kicks back in line to go bullish, you'll see that it ends up delivering low resistance. You know, when price has something like, when price is trading into something like this too, I'll give you one more. So when we have something like this, when we have like a breaker, like we talked about earlier, right? We talked about it a little bit, but a breaker, if price fails to deliver and comes, up into it, oh shit. Put my headphone. But yeah, when price basically fails a breaker, okay, when it chooses to reclaim that high or retrade into that high again, it's going to generally deliver in high resistance, okay? Because work has already been done. It's already taken buy stops. So it doesn't have anything really that it's anticipating yet or anymore, right? It's not anticipating it anymore, really. It's already done the work there. So it's just continuing the trend, but it's in high resistance fashion. Now, it's a different story if you have a failure swing, because that's when fast, low resistance happens, right? And it just blows through it, especially if you couple that with a higher time frame PD array, right? So same thing with lows, right? If we have like a low that has a failure swing, price is going to quickly be able to break down through it. But if it's already got a sweep, that's when you start to see this. And the logic as far as why that happens is because work has already been done when the stops get taken first, which is why we prefer we prefer there to be a failure swing generally, and then a PD array coupled with it as well when we're targeting something. So that's a very easy visual way, two different easy visual ways to think about conceptually and visually what a high resistance or low resistance condition looks like, or what characteristics should be present when it comes to that topic. Does that make sense? Significance of ES not having taken a low, new week opening gap. So SMT is also present when like the S&P hits a fair value gap and delivers lower, but the NASDAQ fails to hit it and goes lower. NASDAQ will be the faster one to the downside if it's the one that fails. The S&P is more heavy, more weighted when you're looking at SMT. So preferably if you're bearish in the NASDAQ, you want to see the S&P show that it's also weak by failing to take certain levels while the other two take levels. Preferably both the S&P and the NASDAQ agree while the Dow is the one with the cracking correlation. Generally, we like to see that more because that just supercharges the NASDAQ and the S&P, because the S&P is supercharging the other two because it has the most stocks, so it has the most impact, right? It's basically the leader when you're looking at SMT. It's very much heavier weighted, I guess you could say. ICT's talked about that a couple times over the years, and it's something that no one talks about. It goes over everybody's head. I've never heard anyone on YouTube talk about it that way. Maybe I'm wrong, right? Let me know if you guys have heard somebody, but for the most part, I haven't seen them. Nobody I've taught has also had that understanding at the beginning about SMT. Like when I first started talking to them, I've never met anybody that knew that. So I think that's a pretty useful tip. Makes a whole lot of sense. Okay, pressure. I'm glad, brother. And significance of ES. Okay, let me see. Just glance at that real quick. So we do got that SMT at the lows, but I mean it's the Dow, so we'll see what happens, right? Like I said, if this breaker ends up breaking, then of course we may look at that as an inversion, right? If it gets above the breaker candle, we'll look to see that hold as an inversion level and see if we can't continue to run through the buy side. But until that happens, right, we complete a market maker sell model. And again, the ship is going to take a while to turn back in line with the bullishness because it takes a lot. We need 3 PD arrays to get violated. If this is the only time frame we're looking at to justify 3 PD arrays being violated, it's going to have to break this high up here. Or just simply getting above this breaker from that weekly chart would be enough. Because we got wicks, order block, midpoint of the weekly bearish breaker, and breaking above the, the entire range. I mean, that's pretty significant. So then that would put our attention to buys. But yeah, we'll see. See what happens. You mentioned a new week opening gap. ES not having taken the low of the new week opening gap. Did kind of breach the low here. I'm not sure exactly what you're referring to. But yeah, looks like on this chart it did breach it, and the SMT is basically present with the Dow. Oh, okay, yeah, that explains it. But yeah, so with everything said, right, we're gonna continue to see if we can't get price to try to come down into there. Full target has been met. We have had a barn burner year. I mean, it's been absolutely incredible. It's been the best year I've had, like, since I started trading. Last year was the best. This year blew last year out by double, which is insane because last year was spectacular. So, I mean, and I've had more students this year absolutely explode. I mean, it's been an absolutely amazing year. It really has. And yeah, you guys are going to have that type of stuff, have that type of experience as well. It may just take a little bit of time for some. Some of you guys are right there at the door of breakthrough, and it's just certain personal things that you got to fix, like we talked about earlier. But don't ever give up. Stuff's been put in front of you on purpose, right? There's a plan for you. And if you've been through the ups and downs and you still have a passion, you're not going to quit, and you're able to sit through these lectures and sit through ICT's concepts, like his lectures, and find what's important and see the value in these long-winded conversations that are very detailed. This is an industry for you. If you enjoy backtesting, I mean, and you sit at the chart and you're encouraged, even if you take a loss. Even if you're trying to find ways to work around that, right, or try to work on that in terms of dealing with losses, but you're open to doing so, this is for you, And mind you, you found me on one of the smallest, like, channels in the whole entire YouTube, like, environment. And we're just in our little corner of the internet, and you guys are taking value from some of the stuff that I've been sharing, seeing what's possible, watching me the whole entire year do this publicly and just smash the crap out of everything. I can't even count how many 100+ point moves have taken place where our entry was at the beginning of the move and it just rips. I can't even count how many there's been. It wasn't like that last year. We caught a decent amount. Last year was, I'm not going to downplay it. It was spectacular. But this year, man, if I would have held some of the trades that I got out of, like 30 to 40 points, I mean, I probably would have had close to, $1 million this year. Because if I just sit there and do the math, hundreds of trades that ran hundreds of points. And if I would have just held them for the hundreds of points that they offered, I mean, bro, easily could have breached $1 million. Easy. But that's still the beauty of trading. Like, we don't need that. It's just something, I've been thinking about the last couple of months. I know a lot of my students, they've been telling me the same thing. They're like, dude, you should have just held it. You should have just kept some partials on. So next year the goal is to get those like massive runs instead of focusing on just 30 to 60 points, which is generally what I live in, which is totally fine, right? There's nothing wrong with it. Nothing wrong with 30 points. Nothing wrong with 20 points. But we're evolving, I'm personally evolving into something greater. And, I can't wait to see you guys get to that stage too. And, have me and the whole world witness how far you can take this, But there's different levels, right? You're at one level right now. You can't see the level that you're going to be at. But that doesn't mean that it's not there brewing. It doesn't mean that the actions you take today and for the rest of the year and all next year doesn't mean that stuff is not catering to that you, the final form of you as a trader. Who knows when the final form shows up also. It's a lifelong journey. But every single day, every time you look at the chart, every back test session you do, every trade you take, every loss you encounter that you overcome, every drawdown that you overcome, every self-doubting thought that you overcome, everything that you overcome and do in this industry, it's adding to the person you need to become. Every book you read, every podcast you listen to that builds your mindset, all that stuff is a building block, It's a piece to the puzzle that you need. Everything you're going through right now, you need to go through whatever it is. It's either going to build you up, right? Or it's going to teach you a lesson. Or it's just going to keep adding like a snowball. And then eventually you're going to wake up one day and look at what you've done, especially if you've documented very well, which I encourage you to do. Document everything that you do in trading. Because when you look back on it, I wish I would have did better with this when I first started. But, we're who we are when we first start. And we don't have certain wisdom as we, progress through things. That's why wisdom is what it is. That's why experience is what it is. Because you learn, you become, more than you are right now. You evolve. And you'll keep evolving as a trader. And you're never going to stay the same until you hit a level that you're satisfied with. But even then, you're going to keep trying to figure out how can I do more with what I already have. I don't want to change what I have, but how can I adjust to do more? If it's needed, which it's not needed to do more, but you don't want to get stagnant, right? You don't want to ever stick like to one level and just stick there unless you're satisfied. But even then, you want to constantly be reviewing, constantly sharpening the iron, because what you don't use, you lose. And anything you don't practice over time, you become rusty. And longevity in this industry requires you to be sharp. You need to know exactly what you're doing every time you're in battle. Otherwise, one of us is going to come take your money. And you don't want that, right? And I don't want you to go through that. We're warriors out here. And, warriors got to train. Warriors got to stay up to date with what they're doing and make sure that they know what's going on before they head into battle. And it's no different as a trader. We're just financial warriors, And the most organized, the most disciplined, the most effective, the most positive-minded traders are going to be the ones that come out on top. The ones that respect the risk the most, but at the same time don't limit themselves too much. The traders that know when to push, when not to push. Those are the ones that are going to end up on top long term. The ones that can get out of drawdown, if I didn't mention that. The ones that look at losses as a lesson, no more than a tuition fee or a tax on your success. People with those mindsets, with those skills, they're the ones that are going to always come out on top. Just like the warrior with the most training, the sharpest sword. You don't generally have to have the sharpest sword to win. You just have to kind of know what you're doing, right? And have heart and never quit. Generally, you'll come out on top. I guess there's a similarity there too with trading, right? Let me see. Presh said, stunning insights. You should have a huge following, unlike other buy my course mentors delaying actual growth of their students. Yeah, they make me sick, as I always say. That's why I'm here doing what I'm doing. I appreciate you saying that. That's the thing. I kind of need your guys' help with that too. That's why I always ask if you guys can like the video, subscribe to the channel. If you guys forgot to do that so far, definitely go do that for me. That'll help me, get in front of more people. And getting in front of more people means I got an opportunity to, first of all, glorify God, because you guys know that I'm a Christian. I'm always talking about God. Every Sunday we're listening to Scripture. This is His day. We're just here enjoying it. So, but then I can also help not only spread that message, but also share my experience, which I've seen. It's what we do here, like I always say, it's unlike most of the industry. There's some that are similar. There's some that have really good results in this ICT army, right? But yeah, it's very, very unique, and what we do, all the traders in my private group, like all my one-on-one students, and even just the ones that are in the tier 1, right? Just always on live calls every day, and communicating in the community. Everybody has a different model. Some have the same model, but use it a different way. Some have the same model, use it the same way, but they find different setups. Some will find buys, some will find sells within the same price leg. So it's a very unique situation, because you're allowed to bring your personality, and I let you have that ability too. But yeah, hopefully one day this community is a little bit bigger, because not for me, for God and the fact that I can help people. I can help more people, because the world is pretty wild right now, and hopefully it calms down. But the world is pretty chaotic, all over the place. Wars and all this stuff, people dying, kids getting blown up. I mean, terrorist attacks and just chaotic civil unrest. Like it's literally, it's unfortunate, honestly. So it's an AI, right? AI's here to take your job. So this ain't gonna be taken by AI. At some point I'm gonna be using AI with what I'm doing to spit out signals for me based on all the things that I share with you guys, all the stuff that I have learned from ICT. One day that's going to be something I'm interested in, diving into, and that'll be present for, like, when I do come up with it, it'll just be simply part of the private community. None of the barriers are going to go up anymore, right? Like the cost, it'll stay the same as it always is. And it'll just be an added perk, along with me flying everybody out everywhere. Right? I got big plans for everyone in my private group. Maybe I'll make sure I do something for you guys here on YouTube too, because I appreciate your time. Because you don't have to be here. You could be with someone else selling you a course, selling you, buy my Lambo type lifestyle. It's a lot more catchy, but like Presh said, they're delaying the actual growth of their students. So it's not what we do here. I'm trying to accelerate your learning, not hold you back, right? But yeah, with that being said, I think I've held you guys enough. Thank you guys for listening and hanging out with me today. Hopefully you guys got value. I'm sorry for the technical difficulties early on, but luckily, we hopped back on and we were able to get through it without any issue, really. Right? So again, God bless you guys. Thank you for all the support, as always. Let me know if you guys have any questions. I'm more than happy to help. Hopefully everything was enlightening today and you learned something or just reinforced some of the stuff that we always do, right? And again, don't forget to like the video, subscribe to the channel, spread the word to anyone you think that can give value or bring value to the community. And with that being said, we will be live again here on YouTube on Tuesday. Let me double check. Yeah, we'll be live again. Yeah, on Tuesday we have holiday, like I said, Thursday, and then Friday there's no news. So day before, day of, day after a holiday, it's low probability. Does that mean we're not going to trade? Does that mean we're going to be off and just take a day off? I'm not. You can. I do encourage you to do some back testing and studying though. If it's too enticing for those of you in my private group to hop on the live calls because we call out moves every day, definitely make your own decision, right? If you do hop on, we'll be on, right, every day this week. And again, those of you on the YouTube channel, I would definitely see you guys on Tuesday, okay? So keep all this stuff in mind. God bless you guys, and I will see you guys on the next one. Hey, you're welcome.